In this section, we'll see the most important area, which is exempt persons. So the persons who are categorically exempted by the UAE ministry here, where it says that such people will be exempted from the application of the corporate tax itself. So let's now see that who are these persons, and few of the key areas we'll discuss in detail. So there are 8 categories of entities who are specifically mentioned in article number 4 of degree or number 47. One thing which I want to clarify here, that throughout this course I will be giving you guys the article references here and also which degree law it pertains to, so that in future, in case if you wish to have your own understanding by into detail into the tax law, you can easily search it. So the first person which will be exempted is, of course, would be the government entity. So any entity which is wholly owned by the government, also which is called as the government controlled entity, will also be exempted from the tax itself. Next is a person engaged in extractive businesses. Now, as we are all aware that UAE is full of natural resources, so these extractive businesses are already subject to the emirate level tax. So these companies are already paying tax on their income to the respective emirate. For example, if a company is established in Sharjah and it is exploring, extracting or removing any of the natural resources from within Sharjah, in that case such entities are qualified as extractive businesses, and such entities are already being subject to the emirate level tax. So in this corporate tax, such entities would be exempted. Next is a person who is engaged in non-extractive natural resource business. Now this is a very specialized activity, and these are only the businesses who are engaged in separating, treating, refining, processing and so on and so forth, or distributing the national resources of the state. So such companies who are exclusively doing this separating, treating, refining, processing and stuff like that for national resources, these are also exempted. So I can closely group these two here, and the government controlled entities are exempt, and the people who are, or the entities who are engaged in extractive and non-extractive national resource businesses are also exempt. Next area is a qualifying public entity, qualifying public benefit entity. So it's called as the PBE. So this PBE is also exempted if it is carrying out its mandated activity. The example would be if there is a charity organization, and I'll explain it in detail also for the condition. Next is a qualifying investment fund. An investment fund which is normally traded on the stock exchange and who are subject to the regulatory reviews are also exempt from the corporate tax. Next area is a public, the pension fund or social security fund, or any private pension or social security fund. So the first one was the public and this one is the private. If they are subject to the regulatory oversight and meet some can say other conditions which will be specified in due course, such entities are also exempt. One thing very important here, as opposed to the VAT law, you will see in corporate tax we will see so many areas where it will say that the conditions that may be prescribed by the minister. So we are expecting that in corporate law we will not be getting the executive regulations, rather we will be getting so many cabinet decisions based on which the law would be further explained. Final area, or the 8th which is exempted, is any juridical person, which means a legal entity in the state, which is incorporated in the state and is wholly owned. This is very important, which is 100% owned and controlled by an exempt person and carry out activities for that exempt person only. Which means that if I am the government entity, I am having another entity wholly owned by me, and it is exclusively conducting the activities only for that exempted entity. In that case also it would be exempt. Now it is important to understand that numbers 6, 7 and 8 are not exempted by default. these three categories have to apply to FTA for exemption. The first 6, if they meet the criteria, they will be exempted. Next slide we'll see in detail that the government and the government controlled entities CT applicability. So if I am a government itself, okay, I am not a government controlled activity, I am acting as, let's say government in some areas. Example, if I am a ministry who is taking out the visa fee, so a specific department of that ministry would be carrying on these activities. So if they are carrying on the activities which will not be commercial, which are their mandated activities, they will be exempt from CT. So purely government entities would be exempt from CT if they are carrying on the activities for which they are formed. Second category is that if such entities, the government entities, are carrying on the commercial activity under trade license. For example, a government entity is involved in, let's say, trading of real estate. Okay, they are buying and selling it. So it would be a commercial activity, although it is under the umbrella of the state government, but still it is a commercial activity. In that case, CT would be applicable. Next is government controlled entity. So in this case, it's not specifically the government entity, but it is controlled by the government entity. So in that case, if they are carrying on the mandated activities, they are exempted from the CT. If they carry non-mandated activities, then it would be, CT will be applicable. For example, a government entity is involved in event management, they are selling the tickets and all those things. So in that case also, they will be taxed. Let's now also see the exemption of qualifying public benefit entity, which is called the PBE, which in general form we call them as charity organization. So these charities or PBEs, if they conduct the commercial activity, if yes, okay, then CT will be applicable. So if they are conducting the commercial activity other than their sole purpose or for their own gains, in that case CT will be applicable. And if they feel that no, we are just carrying on the activity which is purely charitable and it's not a commercial activity, in that case such entities, we have to see, are these entities listed in a cabinet decision? If yes, they are exempt from CT. So only those charitable entities which are exempt, which are listed in the cabinet decision, which will be issued in due course. So a classic example could be like international, you can say the Red Cross organization. I am assuming such entities are registered across the globe. So these entities would be exempted. If they will not be listed in this decision, CT would be applicable. This is very important from another aspect also. So if you are as a business giving the charity to the organization which are listed in the decisions, you would be able to deduct them as admissible expense in tax law. Otherwise, if you are giving charities to such entities who will not be listed in cabinet decisions or otherwise specified, your such expense probably will not be admissible when you are calculating the taxable income. So it's an extremely important area to understand. Final thing is that if you are having the qualifying investment funds, so such funds which are regulated investment funds and real estate investment trusts, which are called as REITs, they can apply to FTA. Again, the condition, as we have a discussion earlier, that such entities will apply to FTA to be exempted and subject to meeting certain conditions. So if FTA approved them, and only they will be exempted, otherwise all such entities will be taxable. First and the foremost condition is that the fund or the fund manager is subject to the regulatory oversight, which means it has been registered specifically with the authority. For example, in UAE we have Securities and Commodities Authority, we have DFSA, Dubai Financial Services Authority, and so on and so forth. And if they are foreign run funds, and they should be registered and regulated by the foreign entities, foreign authorities. Okay. And second is that interest in the investment fund are traded on the stock exchange, which means that these shares are freely traded on the stock exchange, or they are marketed and made available to sufficiently widely available audience. Okay, so the investor can freely enter or exit from such funds. Only such funds who meet these conditions can apply to FTA for their exemption. And main purpose or principal purpose of the fund is not to avoid the CT. Now it is a very interesting area, because anything in CT, its exemption, its qualification, exemption, which we see in due course, those are all dependent on your intent. So if your intent is that you are forming an investment trust fund and the purpose is to avoid the CT, FTA will not approve it. So if your aim is just to carry on the operations and you would not be avoiding the CT, in that case you can apply to FTA and your funds hopefully would be getting the exemption from CT. I hope that the exemption criteria is clear. And just a final area here is that exempted entities, which we have discussed earlier, these are exempt persons. These should not be confused with exempt income. In due course, in our advanced lectures here, we'll see that exempt incomes are also classified separately. For example, the dividend income if you are earning from the UAE based entities. So exempt persons are entities who are exempt from all of their income. Exempt income is a specific area which we'll see in future, that such income, if anybody is earning, it would be exempted. So hopefully, I am very hopeful that you are able to understand all the queries. And here also you can see that on top you can see the website, which is called the taxboss.ai. A lot of free resources also available on this site. So in your free time, you can also visit this, and hope to see you in the next session now.